What economic trends might impact your investments in the coming months?
Great question. Danielle DiMartino Booth and our expert panel will guide you through the complexities of inflation and market volatility, breaking down their insights into quick, actionable takeaways.
And the best part? We've distilled hours of analysis into just a few minutes, providing you with valuable knowledge without the time commitment.
Stay tuned. We'll kick things off with Danielle DiMartino Booth's essential insights on the current inflation landscape.
Welcome to Making Money with Charles Payne, where we delve into economic insights.
Today, we focus on the economic challenges presented by Danielle DiMartino Booth, particularly inflation.
Danielle DiMartino Booth emphasizes that inflation is a critical concern for investors.
She discusses how rising interest rates may increase borrowing costs and create unsettled market conditions.
Danielle observes that we are experiencing heightened market volatility.
She advises investors to stay alert to potential market changes. Danielle insists that keeping an eye on economic indicators is key for investors.
She notes that informed investment decisions rely on awareness of these trends. What does Danielle predict for the future economy?
Danielle foresees continued economic challenges that could influence investment landscapes.
In summary, it's crucial for investors to approach the market with caution.
By staying informed, they can navigate uncertainties and make timely, informed choices.
Today, we're diving into Jerome Powell's insights from Jackson Hole with a focus on the current economic challenges.
Powell's remarks highlight the complexities of market conditions as he outlines potential strategies.
Powell suggested that maintaining higher interest rates may be necessary to control inflation.
This strategy could lead to increased costs for borrowing, impacting economic activity.
Powell emphasizes that persistent inflation will significantly influence future interest rate decisions.
This suggests that stronger monetary policy measures might be necessary to address rising prices.
Powell's discussion presents the uncertainties in the market, predicting fluctuations based on economic indicators.
Traders are likely to react significantly to Federal Reserve news, as per Powell's insights.
What does Powell foresee regarding market stability in the near term?
He predicts increased volatility as interest rates are expected to stay higher to tackle inflation.
Powell advises investors to closely track interest rate trends.
Being ready for market adjustments will be essential in navigating economic changes.
Today, we're discussing housing market predictions for 2025 based on insights from Reventure Consulting.
The analysis explores how anticipated interest rate cuts could reshape the market for prospective homeowners and investors.
Reventure Consulting suggests that upcoming rate cuts may ease borrowing costs.
This shift could bolster demand and create a more favorable environment for homebuyers. The analysis from Reventure indicates that lower borrowing costs are likely to increase buyer interest.
This rise in demand may lead to greater competition among buyers. Potential increases in demand could significantly influence housing prices.
Reventure notes that if buyers return vigorously, we might see stabilization or even price increases.
So, what's the long-term outlook for the housing market, according to Reventure Consulting?
They predict that if rate cuts occur as expected, it could catalyze a bull market environment in real estate.
Reventure Consulting emphasizes that buyers need to strategize in a potentially competitive market.
Additionally, for investors, focusing on properties with strong fundamentals will be essential as conditions evolve.
Today, we delve into an analysis of inflation trends presented by economist Steve Hanke.
Hanke emphasizes that recent data indicates inflation is likely to decline as the economy recovers.
Steve Hanke argues that tariffs will have some inflationary impact, but overall inflation rates will decrease.
These changes may reduce the price pressures that have been significant recently. Hanke highlights how economic recovery signals a reduction in inflation.
Right, as the economy recovers, we should see inflation rates beginning to decline. What does Hanke say about the role of tariffs regarding inflation?
Hanke states that while tariffs may create some inflationary pressure, they are not the main cause of long-term inflation issues. Hanke addresses the growing consumer demand and its impact on inflation.
Indeed, increased confidence among consumers is positive for economic outlook. What predictions does Hanke have for future inflation?
He anticipates inflation stabilizing around 3 to 4% as the recovery proceeds.
In summary, Hanke advises investors to maintain a cautious yet hopeful approach as recovery progresses.
Absolutely. Close monitoring of consumer trends will be vital for strategic investment decisions.
Today, we delve into Chris Vermeulen's insights regarding pivotal shifts in the market.
Chris highlights the significance of certain pivot points that indicate changes are approaching.
Chris Vermeulen suggests that certain pivot points may indicate upcoming market corrections.
He emphasizes monitoring these indicators for shifts in momentum.
Chris discusses how identifying critical pivot points can help traders gauge market sentiment.
He believes that understanding these points is essential for informed trading decisions.
According to Chris, applying technical analysis enhances trading strategies.
He warns against relying purely on fundamental analysis, as it can miss important timing.
Chris informs us that traders should prepare for potential volatility as indicated by these pivot points.
He advises having a defined strategy to manage risks effectively.
What does Chris Vermeulen predict for the upcoming market landscape?
Chris foresees potential market corrections driven by identified pivot signals.
He warns that volatility may continue, impacting trading strategies.
In conclusion, Chris Vermeulen recommends closely monitoring pivotal shifts in market trends.
He urges traders to adopt risk management practices within their strategies.
It's vital to stay alert and adapt to the potential volatility ahead.
Today, we're discussing the economic implications of McDonald's recent price cuts.
Emily Brown emphasizes that these price reductions could indicate significant trends in consumer behavior and the economy.
Emily Brown argues that McDonald's price cuts may lead to more customer visits and higher sales.
According to David Lynn, this could suggest a positive shift in consumer sentiment. Emily Brown points out that growing foot traffic is often linked to optimistic consumer sentiment.
This is crucial, as it may signal larger trends of recovery in the economy. However, there are risks associated with price reductions. They could start price wars.
Indeed, David Lynn adds that this might hurt overall profit margins in the fast food industry.
Emily suggests that McDonald's pricing strategy may hint at broader economic trends.
David Lynn emphasizes the importance of monitoring consumer spending behavior in the upcoming months.
What predictions can we draw from Emily's analysis regarding future pricing in fast food?
Emily notes that while a short-term sales increase is possible, upcoming economic conditions may force restaurants to reconsider their prices.
In conclusion, Emily Brown advises viewers to closely monitor changes in spending as price cuts are implemented.
David Lynn stresses the necessity for businesses to adjust their strategies based on current economic conditions.
Wow, what a wealth of insights we've gathered from our amazing guests.
Indeed, each expert brought their unique perspective, deepening our understanding of today's economic challenges.
And it's fascinating how they agree that inflation is a pivotal issue, yet they don't quite see eye to eye on when it will actually decline.
Yes, Steve Hanke is pretty optimistic about inflation falling, while others suggest we should be a bit more cautious.
Then there's the whole discussion about the housing market. Reventure Consulting thinks interest rate cuts could spark significant changes. Do you think we'll really see that?
It's certainly possible. And speaking of housing, the effects of tariffs are still a hot topic, contributing to inflation concerns.
Absolutely. Not to mention Jerome Powell's insights on the need for strategic interest rates. It really ties everything together.
Right. And Danielle DiMartino Booth's advice to keep an eye on these factors is crucial for investors and consumers alike.
If you found today's discussion valuable, don't forget to like, subscribe, and tap that notification bell.
Your support empowers us to keep bringing you insights from leading economic minds.
Catch us next time as we'll explore how global trade dynamics are affecting market trends.
You won't want to miss it. Until then, keep questioning and stay informed.